All right. So, like I said, you are welcome. I thought it's the other facility that will be taking you today. That was why I did not join initially. I just got the information that she's that I should be the one to take them today. Sorry about the miscommunication. All right. Where did we stop? Can you hear me?
Sir.
Morning. Where did we stop? Have we looked at reporting?
No.
Okay. That's where we are. I think that's where we are supposed to start. So we are starting with reporting, right? All right. So thank you. So reporting is the next topic that I supposed to take us, all right, after we are done with audit evidence. Remember I said we are done with audit evidence, right? So the next stage we are going to is reporting. So in the audit engagement cycle, right, there are about 4 different levels or stages. We started with planning. We move on to gathering of audit evidence. I believe she has taken you on evaluation and review of audit evidence. So that's why I'm going to reporting now, which is the last stage of the audit engagement cycle. So at the reporting stage, what we are looking at is how we collate all the information that we have obtained, okay? How we collate all the information that I have obtained and try to use it to draw up conclusions in terms of expressing an audit opinion about the engagement that has just been completed. So that is audit reporting. And the relevant standard we'll be looking at here are the ISA 700 that talks about reporting, ISA 701 that talks about key audit matters, okay? ISA 706 that talks about emphasis on the matter, then ISA 570 that talks about going concern as well. We are going to be looking at all of these in this regard, all right? So without further ado, that is reporting in summary what we are going to look at. So in reporting, right, we need to, if you look at the report itself, how many of us, I don't know how many of us have been able to cite or behold the auditor's report. If you have been able to see the auditor's report, you see that it's usually contained in annual accounts and report of organizations. That's where you have the auditor's report embedded, okay? Now, if you look at that report, you see that there's a phrase that they use there, which is the true and fair view. It's a phrase, okay? Now, in Nigeria, that is the phrase that the audit report usually contain. However, if you're to be writing ACCA, we'll be looking at how the financial statements comply in all material respect as against using the phrase true and fair view. We're looking at compiling in all material respect, okay? But because you're not writing ACCA, we're writing ICAN. So you are going to, you need to understand what is the meaning of the term or the phrase true and fair view, all right? So, and that phrase cannot be separated. You cannot divide you cannot separate the phrase and try to define what is true then what is fair. It's combined, it's a phrase. All right. So in audit, anytime you come across that phrase, it has 5 different meanings, five distinct meanings. One of it is that when you hear the word true and fair view, it means that the financial statement has been prepared in line with applicable financial reporting framework. That is, they have complied with all the relevant regulation and legislation and accounting standard. That's what it means. Number 2, it also means that they have been able to use accurate figures, and where accurate figures were not possible, they were able to use best possible estimates. Remember in your IS 8, accounting estimate and prior year adjustment, you are allowed to use estimate, provided the assumptions are what? Are realistic or reasonable. Number 3, when you hear the word true and fair view, it also means that financial statements have been meaningfully presented and all disclosures have been what? Have been made so that anybody that picks the financial statement and read the report and the note to the account will be able to make informed decision about the organization. Number 4, when you see the word true and fair view, also means the avoidance of bias, distortion, and imputation of figure. That is, no information has been distorted. All right, and they did not allow for bias. All right, and they did not manipulate any information there. Okay. Then the last meaning of true and fair view is that they have not hidden any material information from the users of the financial information. All the information that you require to make informed decision about the business or the organization has been what? Has been included. So that is what it means. Because there are times I can ask us, you went for a conference or you went for an ICAN webinar, and you're asked to, and your junior associate now met you and said that there's a phrase I see in this report. What does it mean? So the meaning of true and fair view are what I just explained. Okay. If you have any questions, please go ahead and ask. Is there any question? Do you have any question? All right. So we proceed with audit report. Now, audit report, like I said, is the last stage of the audit engagement cycle. Okay. When you are done with reporting, then you are done with the engagement. Once the report has been published. Now, it is important to note that there are two types of report. We have the clean, or you call it unmodified, or you call it unqualified audit report. All right. Then you have the second one. Either you call it modified or qualified audit report. What's the difference between the two? In a clean, unqualified or modified audit report, what it means here is that the auditor has been able to express an opinion that the financial statements presented are in all material respects been prepared in accordance with applicable financial reporting framework. And that means there are no reservations. There are no what? There are no reservations or observations from the auditor as regards the what? The financial statement that has been what? Presented for what? Examination. That means everything is okay. That means the auditor can give a reasonable level of assurance for that type of financial statement. All right? On the other hand, when you talk of the modified or qualified audit report, it means that the auditor has not been able to express an opinion, or the auditor has some reservations about the financial statement that is presented that in no material respect are prepared in accordance, have not been prepared or are prepared in accordance with applicable financial reporting framework. So what that implies is that the financial statement that has been presented, the auditor has some observations, has some issues, has some concerns about the way the financial statement has been presented. So because of those observations or reservations, he withheld his what? Opinion. Or where he has to express opinion, he has to express a qualified or a modified audit opinion. Now, mind you, if you look at the word qualified in normal English, in lexicon dictionary or in lexicon, right? In the English dictionary, you see that when you see the word qualified, is a positive word. It means when they say that you are qualified, it means that you are the right person for that job, right? But that is not the case in audit. When you hear the word qualified in audit, it is being used as a report that has what? Some shortcomings or has some concerns or has some observations that needs to be what? Addressed. All right? I hope that is clear. So before the auditor can express an opinion about the financial statement, he has to be sure that the following requirements have been what? Have been satisfied. Number one, that he has obtained sufficient, appropriate audit evidence as to whether the financial statements are free from material misstatement. He must have obtained what? Sufficient and appropriate audit evidence. How do we define sufficient and appropriate audit evidence? That is, the evidence that he has obtained, that evidence guarantees or gives him a reasonable level of assurance. All right? Then he must also ensure that uncorrected misstatements are material individually or in aggregate. That is, if they have any uncorrected misstatement, we are able to establish whether individually they constitute a material misstatement or when they are added up. That is when they constitute a misstatement. So how do I mean? Now, if you have 1,000 naira as a differential or 500 naira as a differential in all the financial statements, that might not be material enough. All right. But if you have 500 naira in every line of the account head, in opening stock, you have it, closing stock, you have it, purchases, you have it, all the expenses, you have 500 naira. But then you sum all the 500 naira, it's going to sum up to something like 100,000 or 200,000, which might be what? Material. All right. They also ensure that the financial statement gives a true and fair what view. And as the auditor, you must ensure that the financial statements have been prepared in line with the relevant financial reporting framework. Also, as the auditor, you must have evaluated whether the financial statement adequately disclose the entity's significant accounting policies. Okay, that is, they have been able to include in the notes to the account the accounting policies. Okay, such as depreciation. Also, you must evaluate the significant accounting policies, whether they are appropriate and consistent with the relevant financial reporting framework. That is, for instance, you have a depreciation policy. Last year or the prior year, you use sum of digits. This year, you are using reducing balancing method. That means there is no consistency. But if you have used sum of digits method for the depreciation last year and using sum of digits method for this year, it means there is what? It has been applied what? Consistently. You must also ensure that the accounting estimates are what? Are reasonable. That is where they cannot obtain actual figures. Then the estimate they are going to use must have reasonable position. All right. Then you also need to evaluate the information in financial statements is relevant, reliable, comparable, and what? Understandable. Then when they appeals financial statement will not have any cause to what? To have any challenge or a concern, because all the information that's supposed to be there, they are there, and they're able to comprehend the financial statement, and they're able to also arrive at conclusions about whether they want to invest or not. Then also, all the necessary disclosures must have been what? Must have been made. Okay? So when all the disclosures are made, it also aids comprehension. It also aids decision making. All right? So those are the requirements the auditor must fulfill while arriving at his what? Audit opinion. He must ensure all of these areas have been looked into before expressing his audit opinion. All right? Any question? Any
Sir,
question?
I just wanted to ask that, like, in the situation where organization wanted to change policy, maybe
Mm-hmm.
for whatever reason they had, is that
Yeah.
still okay, or will the auditor have to put that in their audit report or something?
Now, thank you very much. Now, when they are making changes to the accounting policies, right? All right. If that change is going to be material, is going to affect the financial statements in a materially, that is in a great way, there will be need for the auditor to include it in his what? In his report. That some of the changes that they have made is what has made maybe the revenue to go up, or it has made the cost of sales to reduce. So there might be need for the auditor to express that in his audit opinion, audit report. I'm going to answer your question.
Yes, thank you, sir.
All right. So let's continue. So the next thing you are looking at is, what does a typical audit report looks like? If you take, if you get hold of it, if you get hold of an audit report, what does this look like? So there are certain features that are present in an audit report, and that's what we are going to review now. I can't remember the diet. There was a diet that I can ask the students in the question. They gave them different. They misarranged the elements of an audit report, and they told the student, I'm talking of professional, not skills. They misarrange the content of an audit report, and they ask the student to arrange it in the order it's supposed to be. So imagine you don't know the order of arrangement of an audit report. How will you be able to answer that question? Okay, so a typical audit report has the following requirements or characteristics. Number one, it must have a title. That is the audit report of ABC Limited for the year ended 31st December 2025. It must have addressee. Who is it addressed to? This report is addressed to the shareholders of ABC Limited. You know, the address to an individual, to some individual or to some set of people. Then it must have an introductory paragraph. ABC Limited is an incorporated company that has been in existence since 2002, and their line of business is agro-allied. Okay? This is the report for the year 2025 under review. You must have that introductory paragraph. Then there should be a statement of management responsibility for the financial state. That is the financial state. That is the management of ABC Limited is responsible for the preparation of the financial statement. They're also responsible for putting in place sound internal control system. They're also responsible for providing unrestricted access to the auditors in terms of accounting records and documents. Then also, they are responsible for the prevention and detection of fraud. So these are the responsibilities of the management. Okay? When you talk about the auditor's responsibility, as an auditor, the responsibility of the auditors is to ensure that the financial statement is prepared in line with applicable financial regulatory framework. All right? That is the auditor's responsibility. Then you now go to the auditor's opinion. Now, before the auditor's opinion, you might have what we call, there are times when you have a situation that we call qualification. That is, there are different types of qualification, qualification of audit report. You have disclaimer, you have adverse, and you have qualified strictly. Okay? What we are saying here is that if it's a clean audit report, that's when you can write auditor's opinion. If it's a qualified, you write qualified audit opinion. You're not going to write audit opinion when there is a qualified audit opinion. You are going to write qualified audit opinion. If it's a disclaimer, you're going to write disclaimer audit opinion. If it's an adverse, you are going to write adverse audit opinion. You will not write auditor's opinion. Later, you are going to write auditor's opinion. Audit opinion is if it's a clean audit report. If it's a variant of any of the qualification, you need to express it in that order. I hope it's clear. Other reporting.
Hello, sir.
This answer your question.
Yes, this adverse and unqualified concerning this auditor's opinion, please, I would like you to throw more light on it.
We are going there, don't worry. Don't worry, we are going there. You are still going to get there. Okay?
All right, sir. Okay.
Also, we will get there. All right? The next thing you are going to look at is the other reporting responsibility. Now, what are other reporting responsibility? Now, other reporting responsibility is cut out from the fact that, when I started, I said that the auditor's report is part of the company's annual account and report. All right. Now, if you are taking hold of, if you have attended any AGM, or you are privileged to have held or glanced through the annual account and report of any organization, you will see that there are so many information that are contained in that document. One of it is the what? The chairman's statement. Another one is the what? The report of the audit committee. There's another one that they call the sustainability report, and a lot of other information. Now, as an auditor, when you are writing your audit report, you are not writing your report in isolation of other information as contained in the annual account and report. You must ensure that the information in the annual account and report is consistent with your audit report. For instance, the chairman's statement. The chairman's statement states the activities of the company in the year under review and whether the company has made profit or not in the year under review. So the chairman's statement can go something like this. ABC Limited operated in a good environment in the year under review. However, because of the economic outlook or economic factors, we could not achieve more in terms of profitability, but we're able to achieve 100 million profit after tax. That's an excerpt. That's just a bit of that chairman's report. Now, let's now go to the financial statement that the auditor expressed his opinion on. In that financial statement, it must also contain that the profit after tax in the financial statement is also 100 million. There should not be a variation. Not that when you look at the financial statement, you are seeing profit after tax of 80 million, whereas chairman said 100 million. That information must be consistent. So the auditor will express an opinion. We express in this section that he has been able to review all the information contained in the annual accounts and reports, and he found out that what the information is what is consistent. The information is what is consistent. Also, like the example one of my brother said here, talking about when there's a change in accounting policies. If that change in accounting policy is material, that is going to affect financial statements materially, right? You can also put it here and say, we observe that the company changed accounting policy, and this had a significant effect on the financial statement, particularly on the revenue, or particularly on the cost of sales, or particularly on so and so. You must be able to state it. All that information can come under this heading. Then you now have the auditor's signature. Okay, you have the auditor's signature. Then you have the date of the audit report. Then you have the auditor's address. This is a typical audit report characteristics or features. Any question? Any question?
Sir, yes. And in the situation where like they have to maybe disclaim anything that may be it might not be material, but it would be like it would be important for the users of the financial statements to know. Would they also put it in number 7?
No. That will come under a separate section before the number 7. That will come in between the auditor's report. It will come between the audit opinion and other reporting responsibility. And that's what we talk about key audit matter. That's when you talk about what? Key audit matter. Is that clear?
Yes,
is that
sir.
clear, Mr. Do you understand? Do you know it's because of the way you frame your question. You said that it is not a disclaimer, but the auditor needs to let the users of the financial information understand how that information is going to impact on their decision. Is it not what you said?
Yes, like there was something that we spoke about. I don't know whether it was with you or with the other lecturer, where she was like, it's not all information that might be material. There are some that are not material, but the auditor still needs to bring to the notice of the
That's what I'm saying. So in that instance, then you are referring to key audit matter. We'll get to that place. We'll get to that point also in the course of this class, okay? Just hold on. That means you have two things to discuss now, and you're going to get there. One is the key audit matter. The other one is the qualification of audit report. Types of audit qualification. We are going to get there. All right? I'll be able to express that.
Okay.
Yeah.
So please
ask your question.
This key audit matter now, can we list it as part of the contents of auditor's reports?
Yes, now. That's why I said that it will be in between the auditor's opinion and other reporting responsibility. Do you get that?
Yes, sir.
Did you get what I say, Madam Mondara?
Yes, I get it.
So we'll get there, don't worry. I don't want to rush us. That's why you see me, I'm going gradually, okay? Now, the one you talked about, modification of audit reports. There are two things that can make the auditor to qualify his audit report. Two things. Only two things can make the auditor's report to qualify his audit report. Based on what? ISA 705. They are just two. Number one, when there is a limitation of scope. Number two, when there is a misstatement. Those are the only two things that can make the auditor to qualify his audit report. All right. Now, I just want to see whether I have it. It's there. I know it's there. Don't worry. I don't want to say so much about it. It's there. Okay. Now, let's continue. I'll come back to emphasis of the matter. I told us we are going to come back to that. All right. Now, let's go to that place that I talked about. Emphasis of the matter, we are coming back to emphasis of the matter. Don't worry, we are coming back there. Let's go to that multiplication. Look at it here. Where the auditors must issue a modified opinion. Look at it. Modification of the opinion in the independent auditor's report require the auditor to modify his opinion in the audit report in two situations. When there is what? Material misstatement, and when there is what? Limitation of scope. Now, material misstatement occurs when the auditor concludes that based on the audit evidence obtained, financial statements as a whole are not free from material misstatement. Or number two, under limitation of scope, this occurs when the auditor is unable to obtain sufficient appropriate evidence to conclude that the financial statements as a whole are free from material misstatement. So what we are saying here is this. I want to believe that the other facilitator has explained what you mean by misstatement to you. Because we have a standard in audit that explains misstatement. It's called ISA 450. It talks about misstatement. First of all, it defines misstatement, and it gives us the types of misstatement. I don't know whether that was explained to you in the previous class. Hello? Are we there?
Not in the previous class.
But you were taught, right?
Yeah, but we understand it.
Okay, good. So what that means is that we're talking about misstatement. These are some of the definitions of misstatement. Number one, when we talk about misstatement, it means the misapplication of accounting policies can lead to misstatement. That's number one. Number two, the inappropriate presentation of the financial statement can also lead to misstatement. Inadequate disclosure can also lead to what? Misstatement. Okay? Then when there is a wrong posting, when there's a wrong posting in the financial statement, can also lead to what? Misstatement. Or when you have transposition, such that you're supposed to write 500,000, you wrote 50,000, can lead to misstatement. These are the types of misstatement that we talk about. All right? So, because of this misstatement, the auditor can qualify his audit report. I hope that is clear. Now, in the case of limitation of scope, we talk about limitation of scope, mean that there were situations where the auditor were not allowed to perform their assigned audit responsibilities. For instance, if the auditor is appointed very late, they want to prepare auditor's report for year end 2025, December 2025, and they appointed the auditor November 2025. There's little the auditor can do within that short time. So that can lead to limitation of scope. All right? Another can lead to limitation of scope is that the auditor wanted to carry out some audit tests, but the management declined. They not allow the auditor to do those tests. For instance, the auditor wanted to do stock count. They said you cannot do inventory count. You want to do cash count, you cannot do cash count. I want to circularize your customer. They say you cannot do that. All of this will have impact on the financial statement, because that means the auditor cannot express a reasonable level of assurance on the information contained in the financial statement. Is that clear? Now, because of this, right, we have three types of modification. You have the qualified opinion, then you have the adverse opinion, then you have the disclaimer of opinion. What are the difference between the three? Let's look at it. Now, look at this diagram here. Look at this diagram. When there is a qualified opinion, what it means is that qualified opinion could be as a result of material misstatement, or as a result of what? Limitation of scope. I take it again. It could be as a result of what? Material misstatement, or as a result of what? Limitation of scope. You have what we call qualified opinion. So what you are going to see in that instance is that the auditor will say that the financial statement shows a true and fair view, except for If he's not been able to carry out inventory count, say that financial statement shows a true and fair view, except for the inventory balances that could not be what? Established. That except for means that he has qualified his audit opinion, because that qualification only affects an aspect of the financial statement. So it is not to a very large, it just affected just an item in the financial statement. So that's what we express for except for. All right, whether because of misstatement or because of what? Division of scope. Now, the other two, adverse. Later we express an adverse opinion where there is what? A material misstatement that cuts across not only on one aspect of the financial statement, but on virtually all the aspects of the financial statement. Virtually on what? All the aspects of what? The financial statement. So it's not talking about only inventory. It affected revenue. It affected the cost of sales. It affected expenses. It affected every aspect. In that instance, the auditor will issue an adverse opinion. And anytime an adverse opinion is issued, it means that the auditor cannot, that means the audit needs to be what? Needs to be done all over again. All right. Now, if you look at this diagram, you can see here where I talk about material but not pervasive. And here I said material and pervasive. So what's the difference? Look at the meaning here. When you talk about pervasive, it means it is found everywhere. When you say something is pervasive, like your perfume, if you say your perfume is pervasive, that means everywhere you go, people can perceive your what? Your perfume. Okay? So a passive misstatement would be so serious that to all intent and purposes, financial statements are useless. So like I said, when you have material misstatements that affect or cut across most of the aspects of the financial statement, you can call it what? A pervasive. Okay? I hope it's clear. A matter will be material but not pervasive when the auditor encounters a material problem with one or more specific items in financial statements, such as problem with inventory or revenue. But the remaining items and the financial statements as a whole provide a true and fair view. So what does that mean? It's just trying to confirm or corroborate what I said earlier. That is, when you're talking about material and pervasive, it means that that misstatement is material and it has affected all the other parts of the financial statement. But when you say material here, but not pervasive, it means that yes, there is a material misstatement, but it only affected just one item, one account head in the financial statement. So you can say that, except for that, other aspects of financial statement is okay. I hope it is clear. Now, for the disclaimer of opinion, what do we mean by disclaimer of opinion? Now, disclaimer of opinion, as the name implies, I'm just trying to explain all of this, okay? I'm coming. Just trying to use an example. When you talk about disclaimer of opinion, what it means is that as auditors, right? As auditors, you cannot form an opinion. Why? Because you cannot form an opinion. Why? Because some aspects, some audit procedures or some audit tests have not been performed. And that audit test is what? Is material and cut across virtually every aspect of the what? Financial statement, ranging from revenue to cost of sales to assets to all areas. So because of that, the auditor is not able to form an opinion. It's called what? A disclaimer of opinion. All right? Because of what? Limitation of scope. But on the other hand, for material misstatement, when there is a material misstatement that cut across every aspect of the financial statement, we call it what? Adverse opinion. So the auditor will express that they cannot form opinion in that instance, but they have to do a re-audit. In disclaimer, there is no re-audit. Okay, when the auditor issues a disclaimer of opinion, it doesn't mean that they are going to do the audit all over again. But in the case when the auditor issues an adverse audit opinion, they have to do the audit all over again. That is the implication of what? Adverse. So adverse audit opinion is the worst audit opinion that can be what? That can be issued. I hope it's clear.
Yes, sir.
Thank you very much. So all of these, I've talked about them in the course of discussion. I said the limitation of scope means preventing the auditor from observing physical accounts, preventing the auditor from acting or confirmation for account balances for receivables. You can see all of these things I've explained it earlier. All right. Now, let's go back. Madam, I hope I'm able to answer your question on qualification. Madam Olara?
Yes, sir. No, my question is, I'm just asking that if we are like for us to list the auditor's reports, can we put key audit matter as possible? That's my question. You've been able to, and you've answered me.
No, who asked the question on qualification of audit report before?
It wasn't me.
Okay, no problem. Sorry. All right. So someone asked a question on audit qualification, and I hope I'll be able to answer that.
Yes, I was the person, sir. Yes,
Is it
I'm
clear,
okay.
right?
It's clearer, yes, sir.
Okay, thank you. So
Thank
thank you. That means it remains the key audit matter. We are going there gradually, okay? Just hold on. Let's explain the aspect of what do we call it now? What that has to do with emphasis of the matter that I want to talk about. Emphasis of the matter. Now, emphasis of the matter. Let's talk about this. Now, emphasis of the matter, because it's from emphasis of the matter we are going to move to key audit matter. Now, emphasis of the matter is covered under ISA 706. What does it mean? So an audit report may be modified to include an emphasis of the matter paragraph, okay, or other matter paragraph. Now, the purpose of this paragraph is to provide additional communication in the audit report where the auditor wishes to draw attention of users to a particular matter in the financial statement. They do not modify the auditor's opinion, okay? An emphasis of the matter paragraph draws the attention of users to an item that is in the financial statement which the auditor considers fundamental to an understanding of the financial statement. Other matter paragraph deals with matters which is not included in the financial statement, but which is relevant to the understanding of the audit, the auditor's responsibilities, or the audit report. So, what am I trying to say? So, there's a thin line between emphasis of the matter and key audit matter. There's a thin line between the both of them. We are going there, okay? Circumstances in which the emphasis of the matter paragraph may be necessary gives the following example of circumstances in which emphasis of the matter paragraph may be what? May be necessary. Number one, where there is an uncertainty relating to the future outcome of an exceptional litigation or regulatory action. Where the entity has adopted a new IFRS earlier and that has had a pervasive effect on the financial statement, or where the auditor draw attention to a major catastrophe that has had and continues to have a significant effect on the entity's financial statement. So what am I trying to say? So emphasis of the matter, what it means is that it is not, first of all, it's not a qualification. It does not mean that the auditors are qualified in the opinion. They just say that there are certain information the auditor wants to bring to your attention as a user to the financial statement. Now, that information is usually contained in the what? In the notes to the account. It usually contains what? In the notes to the account. So let's give an instance. So, let's give an instance. Let's look at a fire affected part of the business. So, a fire occurred in the let's say, before the year ended or after the year ended, okay? After the reporting period. The reporting period is between January and December, okay? But this fire occurred January of the next year. Do you understand? January of the next year. Now, why am I talking about January of the next year in this year's? Okay, let's take a look at it this way. January to December 2025. And this fire incident occurred in January 2026. Now, somebody might ask and say, why am I bothered about what just happened in 2026? Trying to consider putting it in 2025 audit report. Now, this is where the question is. I also want to believe that the other facilitator has also explained what you mean by subsequent events, ISA 560. What is subsequent event? These are events that happen in between the reporting period and the period when the financial statement is published. Those events that happen in between this period, the reporting period and period where financial statement is communicated to the public or published is known as what? Subsequent event. Okay? So there are two types of events. We have adjusting and non-adjusting events. What's an adjusting event? An adjusting event is an event that you have privileged information. You are aware that it's going to happen because you started seeing the indications of that event in the year. Only that it did not crystallize on time. It crystallized later on before the year ended. We call that kind of event a what? An adjusting event. Why? Because you are aware of it. A good example of this is this. So you have a customer that usually a good customer that usually buy from you. Then his pattern is that when he buys from you, he pays 2 months after. So after he purchases he made this sales or purchase from you, that is sales, right? You invoice him. He said he's going to pay in 2 months' time. Before the 2 months, he was robbed or he was duped. So he could not pay as at when due. Because of that incident, you kept on asking for your money that you want the receivable to be cleared. He fell sick. In the process, 3 months down the line, you heard that he was hospitalized. Then by December, you heard that the man has died. So that kind of a situation, it means that you are aware because you are aware that before the year ended, you heard that he was duped. You heard that he was sick. So somebody that is sick, two things can either happen. Either the person will recover or the person will die. Is it not? So because you have that information and the person died before the year ended, it means that it's an adjustment. That means you need to either write off the debt or you look for a way to reduce the debt. You don't want to write it off. All right? That's an example of an adjusting event. Now, another adjusting event is this one I just explained now. A fire gutted one of the warehouses. All right? After the year ended. That is January 2026. So in that instance, why is the auditor going to consider that information? Because the auditor will not come in to audit in between the year. The auditor will come to complete the audit after the year has ended. So the year ended 31st December 2025. The auditor will come in 1st of January 2026 and will continue to work on 2025 accounts till maybe the end of January 2026. And that was when this information came in. So because there was a fire incident and affected one of the warehouses, it means that there's probability that the inventory balance for the coming year, for 2026, might be affected. The author needs to bring it to attention of the user that you are saying that the inventory balance is high in 2025. Please remember that we had the fire incident in 2026, and this might impact the inventory balance in 2026, just for your information. That's an example of what? A non-adjusting event, because the auditor will only put this information only in the what? Notes to the account, which is a clear example of what? Emphasis of the matter. The auditor wants you to be aware that this incident occurred. So that by the time 2026 come, you'll not be saying, inventory balance last year, because you have 2025, 2026. You know that last year was higher now. Why is this year lower? The auditor has already pre-informed you in the notes to the account as what? Emphasis of the matter. So emphasis of the matter always point your attention to the disclosure in the notes to the account. I hope it is clear. Are we cleared?
Yes, sir.
Thank you very much. Then another thing I can also talk about emphasis of the matter is going concern. We are going to talk about that one too. That's ISA 570. Now, going concern means as a business, prior to now, before the adoption of IFRS, we understand going concern as what? Is an accounting concept that says that the company will continue to exist into what? Into perpetuity or into the future. But with the adoption of IFRS, it has been changed that the company will continue to exist for the next 12 months. So what that implies is that the auditor wants to know that they have carried out a going concern assessment. So there is a need for every company to conduct a going concern assessment. The auditor will request for that report. And based on that report, the auditor will ask whether for the next 12 months, this company can continue, or this company can survive. So based on the information that the management provide, is what the auditor will now need to educate, need to inform users of that information that yes, this company, they are struggling, but from the information we gathered from the management, we believe that for the next 12 months, this business will still continue to exist. as indicated in note 5 or as indicated in note 4, as the case may be. So all of these examples I made mention now, they will be included as part of what? Emphasis of the matter. Why? Because the auditor wants to bring it to the attention of the users of the financial information. I hope that is clear. Now let's take it further to that other one that we are talking about. Key audit matter. I hope it's here. Key audit matter. I hope it's here. If it's not there, I can still explain it. Okay, just hold on. Okay, it's not here. Let me explain what you mean by key audit matter. Key audit matter, like I said, is contained in ISA 701. That's where you have key audit matter. So key audit matter is defined as the auditor consider information as key audit matter because based on its professional judgment, and because these events occurred in the year under review, he has decided to term it as what? Key audit matter.
But you say based on what judgments? I'm so sorry.
Based on the auditor's professional judgment and the year under review, because it occurs in the year under review. Are we together?
Yes, sir.
You got what I said?
Yes, sir.
Let me take it again. I said that key audit matters are matters which the auditor considers based on his professional judgment are what? Significant during the audit of the current period. Do you get it? These are issues, transactions, events that the auditor considers based on professional judgment as what? Significant that has occurred in the year under review as key audit matter. I hope you got in definition.
Yes.
Have you
Yes,
got the definition? Thank
yes,
you.
sir.
So that is key audit matter. So what that means is that if I consider an event to be considered as key audit matter, you might not consider it as what? Key audit matter. Why? Because it is based on what? Professional judgment. So professional judgment can be what? Can be subjective. That's what I'm trying to say. I consider it as key audit matter. You might not consider it as key audit matter. All right? So that is one. Number two, when you talk about key audit matter, that event, that transaction, that issue must occur in the year under review. Not something that happened 2 years ago. It must be something that happened in the year under review. If it does not belong to the year under review, please do not consider it as what? Key audit matter. For instance, let's look at the case of Access Bank and Diamond Bank that came together in 2018. Now, as of 2017, both of them, they were existing as two separate independent banks, Access Bank and Diamond Bank. But in 2018, they decided to come together as one, Access Diamond. So what that implies is that for the depositors and the shareholders of these banks, they would like to know what actually happened. So key audit matter also is not a qualification. It is just an item, a section in financial statements, a segment in the audit report that will state what happened, why that matter is considered what? Significant. Now, for you to understand what I'm trying to say, the key audit matter is derived from auditor's observation. So when the auditors go to audit, it's going to get as many observations, it's going to obtain as many observations as possible. So based on the observations he has gathered, he's not going to do what? He's not going to put them under a scale of preference. He's going to rank them from critical to negligible to all of that. So let's say at the end of the audit, the auditor was able to note 10 observations. Out of that 10, all of them cannot be material. Maybe just 3 are material. Those 3 that the auditors consider material are the ones the auditor will term as what? Key audit matter. So I was talking about the Access Diamond Bank. So when they came together, there are so many questions that the people want to know. People wanted answers to them. One of them they want to know is that what will happen to their deposits with the banks? How were they able to migrate the deposit from one bank to the other? That is a concern. We talk about what? Data integrity. How are they able to move your balance that in Access Bank, you had 10,000 naira. When they move it to Access Diamond, it still remain 10,000 naira. How are they able to do that? So you want to know. You also want to know how were they able to settle, how were they able to reconcile the banking software that were compatible with both banks? It's a question that you also want to know. You want to know how did they treat the other staff that they don't want to, how did they even treat the staff generally? Did they absorb all the staff or some of them had to be let go? All of these are questions that are calling for answers. So as an auditor, when you are going to audit that kind of a situation, you need to go and ask the right people. You need to go and ask, first of all, you will need to ask the system administrator of the two banks. How were you able to migrate the data from one banking platform to the other platform and you did not lose any information? The auditor will say that, okay, the administrator will say that while we are doing that, we ensure that there is a proper change management system in place. And we only ensure that only qualified people are the ones that are enrolled in that process. Not for every Tom, Dick, and Harry, because if you enroll every Tom, Dick, and Harry, there can be data manipulation. They only enroll people of senior level so that they understand the implication of when there is a manipulation. And there was also a review thereafter to be sure that what was migrated was what was actually the balances of the customers. They also want to know that the question I asked now, they want to know what banking platform are they using. So what that means that maybe Finacle was what was being used by Access Bank, and this one is using FlexCube. Now they now say that, okay, now they have come together. Which one are they using now? If they are using Finacle, higher version of Finacle, that's what they are now using. So after the migration, they're able to carry out a study and found out that Finacle 2018 was the best that can accommodate the two banks. So, and that is why they have gone for Finacle 2018, and that is why they were able to accommodate all those changes on migration. So, what am I trying to say? What I'm trying to say about key audit matter is that it's going to come in between the auditor's opinion and other information paragraph, and it's going to state that it is not a qualification. Rather, it is an information that it contains an information that needs to be shared with the users of financial information because those information or that information is considered critical or significant. Do you understand? Are we together?
Yes, sir.
Any question?
Sir, yes, I want to ask. So this key audit matter and sorry, if you can please remind me the other one that is almost like it.
Emphasis on the matter.
Emphasis on the matter. That one is based on like situations that happen after the reporting period, but before the authorization of before the publishing of the financial statement. So I wanted to ask that, like, how would we arrange them in the audit report if both of them come to place?
Okay. Someone wants to ask another question. Any other question? Any other question? Any other question?
No, sir, for now.
No.
Okay. All right. So to answer your question, when both can appear, right? Both can appear. But what happened is that I'm coming. Both can appear, but what happened in that instance is that you need to look at which one is dominant. So for instance, when you have emphasis of the matter and you have key audit matter, so that means both of them will appear. And both of them will appear, like I said earlier, they are going to appear in between that audit opinion and other reporting engagement. All right. So what that means is that the key audit matter will come in first. after that audit opinion, you now have the emphasis of the matter coming thereafter, just beneath the key audit matter. Do you understand?
Yes, sir.
Have I been able to answer your question?
Yes, sir.
Any other question? Any other question? So what you need to also understand is this. Both of them can appear, like I said, but when they are appearing, they are not appearing as the same. What I mean is that I've explained what you mean by key audit matter. I also explained what you mean by emphasis of the matter. So don't go and replicate what you have as key audit matter as your emphasis of the matter. They appear on two separate instances. One is based on criticality. The other one is just for what? Information. And it must have occurred either in between the period or before the audit report is issued or communicated to the users of financial information. I hope that is clear.
Yes,
Are we
sir.
clear? Thank you. Any other question? Can we move to the next chapter? Okay, before we move to the next chapter, let's look at, I think there is a question here. Let's look at this question. You are the manager in charge of the audit of Coloroso, a limited liability company. Your audit report for the previous year end at 31st December year 7 was signed without modification in February year 8. The scope of the audit for the year 31st December year 8 has been limited. The scope, I hope you are noting it. Scope has been what? Limited, limitation of scope. This is because the company's chief executive fled the country in April year 8, taking the accounting record with him. You have identified a valuable training opportunities for Robin, one of your audit team. As a training exercise, you have asked Robin to draft the extract for the basis of opinion and opinion paragraphs that will not be standard wording in an unmodified audit report. Robin draft extracts were produced as follows. Robin draft extracts are produced as follows. This is own excerpt or extract. Our basis of opinion. However, the evidence available to us was limited because accounting records were missing at the beginning of the year, and it was not possible to reconstruct them completely. Opinion. Because of the possible effect on the limitation in the information available to us, we do not express an opinion on the financial statement. Requirements. Identify and comment on the principal matters relevant to forming an appropriate opinion on the financial statement of Coloroso for the year ended year 8. Number 2, discuss the suitability of Robin's draft extract. So this is the answer. So to answer the first one, identify and comment on the principal matters relevant to forming an appropriate opinion on the financial statement of Coloroso for the year ended 31st December year 8. To answer this, you need to identify the principal matters relevant to forming an opinion, then comment on these matters. You also need to identify whether Robin report indicates that Robin has identified and considered these matters, okay? Then you need to reach a conclusion about whether Robin's report is suitable. This may involve setting out what would have been suitable if audit report is not suitable. So the first one, matters relevant to forming an opinion. Number 1, the following matters are relevant to forming an opinion. Number 1, the accounting records for the opening 3 or 4 months of the year are missing. Number 2, the accounting records are missing because the former CEO absconded with them. There must be some reason why he took the accounting records. Fraud is a possible reason. All right. Number 3 reason, the audit opinion for the previous financial year was unmodified. This would imply that the opening balances for the current year and comparative figures for the previous year are correct. However, this might not be the case. Number 4, if there is a possibility of fraud, This would raise doubt about the correctness of the audit report of the previous year. There may have been fraud last year, which was undetected, and this might have caused material misstatement in that audit report. Number 5, there's an inability to obtain sufficient appropriate audit evidence, limitation of scope for the year 31st December 2020. We will answer that first question. Second question, the B part, conclusion about draft or Robin's draft. Robin is correct to modify the opinion on the grounds of limitation of scope. However, the draft should make reference to the exact nature of the problem, possible fraud, and take account of a possible modification in relation to their comparative figures for the previous year, and to take account of the fact that the problem might be limited to the statement of comprehensive income. That is how to answer that question. Okay, that's a question on what report. One of the questions on reporting that you might need to we just treated now. All right. So we continue. So yes, you do.
Sir, sorry, just wanted to ask, like, which type of opinion is this? Is this which type of modified opinion is this?
Thank you. So this kind of opinion you have here is a limitation of scope. So it's going to lead to disclaimer at the end of the day, because they said that he made away with what? Some of the information for 4 months, right? He made what? He made away with some of the information. Where is it here? You have it here now. We read it now. This is it. Let me show us. This is it here. I'm coming. I want to show us. Where is it? Where is that thing now? I saw it now. This is it. The company's chief executive officer fled the country in April, year 8, taking the accounting records with him. That means from April to the end of the year, 8 months were not available. So how can he form an opinion on that? So that is a disclaimer report. Why is it a disclaimer? It's because number 1, there is no information. This one is not that the editor cited any document. He did not cite the complete document. He only cited part of the document. That is just for 4 months or 3 months. Okay. So for 9 months, the information was not available. That means there's a serious limitation of scope, and it's cut across all aspects, because they did not say record of inventory, they did not say record of revenue, they did not say record of expense. They said it took away all the accounting records. I'll be with Mr. Inumidu.
Yes, sir.
So because of that, the auditor is going to issue a disclaimer of opinion in that regard. Is that clear?
Yes.
Or do you have a contrary opinion?
I was thinking it was going to be adverse.
Why adverse? What is the condition for adverse?
If there's okay, adverse has to do with misstatement. Okay,
that is it now.
Okay.
So see, I don't want us to be dogmatic when we are answering questions. You have to be practical. You have to have an open mind. That's why I gave you how you're able to identify whether it's a disclaimer or whether it's an adverse. You see that you're the one that answered the question now. That's why it's going to be in your exam. You must be convinced that, this is why I'm taking this answer. This is why I'm writing in this way. When let's say you don't have the information now, you might be arguing from now to tomorrow that no, it's an adverse, so it's not a disclaimer. But you yourself, you answered yourself, because before I started, I explained circumstances that can lead to an adverse, circumstances that can lead to what? A disclaimer. So that's why you're able to understand and even make adjustments where necessary. So we are together now, Abi?
Yes, sir.
All right. Thank you. That's the way I do my test. I want you to see it so that it's not a guesswork. Everybody can see what I've said. Or does anybody have a contrary opinion? Anybody with a contrary opinion in the class? We're all good, right?
Yeah.
Please respond, though. That's the only way you are going to give me the motivation. Though.
We are good, sir.
Yes, sir.
Hello, sir.
Okay. Thank you very much. So we go to the next
Hello,
one.
sir.
Yes, please go ahead.
Hello, sir.
Please go ahead,
I
madam.
want to it's not actually a question, but I want to confirm what I know. I'm trying to like differentiate between key audit matter and emphasis on matter and other matters. So key audit matters now, according to the explanation, are the things based on the auditor's judgment. And based on the auditor judgment, we could be as a result of maybe his experience and all of that, he's able to form that key audit matter. He believes that the users of financial statements should know about it. That's what key audit matter is.
Yes.
Then emphasis on the matter is the thing is already in the financial statement, but he needs to emphasize it for the users to know, to draw their attention to it. As in, because of the importance of that particular information. That's emphasis on matter. So the other matter paragraph. Other matter paragraph is, I don't know that one.
Okay, now thank you. But you are clear with emphasis and key audit matter.
All right, sir. Thank you.
Are you clear with emphasis on emphasis of the matter?
Yes, if what I said is what they had, then
no, it's correct now. I said it's correct. That's why I was telling you fantabulous. It's correct.
All
you
right.
are correct.
All right.
Now, what do you understand by thank you? So what do you understand by other matter paragraph? Like I said, other matter paragraph will arise because they are not contained in the financial. That information is not on the face of the financial statement, but it has an implication on the what? On the auditor's report. Like the example I gave now, somebody said that a change of accounting policy in the course of the year. That change of accounting policy is something that occurred, yes, but in a way, because of that change, right, it has an impact on the what? On the transactions, how transactions are treated in financial statement. Okay, but it is not directly related to that particular engagement. I mean, that particular report. But when you talk about other reporting paragraph, means other information that are not in the audit report or that are not in the financial statement, but auditor feel the need that it needs to let you know about them. Another good example of this is one I made mention of. I said that the audit report is embedded in annual account and report documents, where you have the chairman's statement, you have the report of audit committee, you have the sustainability report, you have employment report, you have so many information in that particular document. So what we are saying here is that as auditors has also looked at all the documents and the information and sees that that information is consistent with the information in the audit, in the financial statement. So that matter can also be regarded as other matter paragraph. Is that clear, madam? Madam, is that clear now? Hello, madam. I forgot the person that asked that question.
Yes, sir. It's okay, sir.
Thank you very much. So you understand the difference between the three now?
Yes, sir.
All right. Okay, so let's continue. We are now in another chapter, chapter 15. Now, chapter 15 is talking about what? Current issues in auditing. What this one means is that what are the new updates that has impacted or affected the audit and assurance profession? We call it what? Current issues in auditing. One of the first things we are going to look at is regulation of auditing, an ethical framework or a rule book. Now, this should take our mind back to chapter 3, when we talk about rule of professional conduct. Okay? Now, in the rule of professional conduct, what did we emphasize? We emphasize on the fact that the auditor needs to comply with some ethical principles, which are what? Integrity, objectivity, 7 of them, right? Now, why are we considering principles? Now, principles is part of the ethical framework. Why the rule book approach is just talking about a document that contains do's and don'ts of auditors and accountants. Now, there's a debate. There are 2 schools of thought that some believe that the rule book is better than the ethical framework. But what we found out is that what is different between, let's first of all understand what's the two of them. What do we mean by ethical frame? What do we mean by a rule book? Now, a rule book approach is set out the rules about what must and what must not be done. Those are the do's and don'ts of the profession. Is it practicable for you to have a document that contains all the do's and don'ts of the profession? That's the answer to every one of us. It's a rhetorical question. Do we have a document that can contain all the... So let's practicalize it. ICAN was instituted what year? Who can answer that question without looking at your Google? I want 2 minutes. ICAN was instituted what year?
1968.
19 what?
65.
You have looked at your Google, Abby?
No.
Sir,
Okay, what
we are
act of...
just good.
Okay, what act of parliament set up the institute?
At I can't remember that one.
Act number 15 of
Act
1965.
number
Number 15. Act number 15. Act of Parliament number 15 of 1965. That's the act that establishes ICAN. Now, what am I driving at? ICAN has been in existence for over 60 years. And you have a book that contains the do's and don'ts. So let's say you want to make an amendment to that book. How easy is it going to be? Will that be possible? The answer is no. And if it's possible, it's going to be what? It's going to be tasking to go back in time, 60 years before now, to go and look at the first volume of that book and try to see how you can make amends. It's going to be what? Very difficult. Now, compared to the second approach, ethical framework approach, that set out principles that should govern behavior with reason, argument to support the principles. So this one is not talking about the do's and don'ts. They just give you those principles. It's not like for you to be able to interpret that principle to your best of knowledge. For instance, talk about acceptance of gifts that we say it can affect your independence. How can it affect your independence? So what that means, does it say that you should not collect gifts? The answer is no. They say that when they give you gifts, you should not accept it. The answer is no. What he says is that any gifts that you know that when you collect it, you will not be able to stand your ground. You will not be able to say what is right. Do not collect such gifts. It's very, very clear. You can understand where the principle is coming from. You're talking about integrity. What is integrity? You have to be honest. Honesty can be looked at from any angle. From your relationship, from the conduct of your engagement, anywhere you can look at integrity. So it is what? It is broad. Unlike something that is narrow-minded or that is myopic and say that you don't steal. Now, let's look at an instance. Now, when you're talking about the rule book, it's similar to the 10 Commandments in the Bible, in the Holy Bible. Now, one of the 10 Commandments is that thou shalt not steal. That's what we have in the Bible, right? Looking at that law, thou shalt not steal, with 2026 understanding of the term thou shalt not steal. Now, when they say thou shalt not steal in the Bible, they were not aware that IT is coming. You are going to have an era of what? IT. IT, with knowledge of IT, you can steal an information without touching it. Yes, you can steal an information without touching it. Now, how is that possible? Now, you went to you went to an eatery and you ate. As someone that likes to show off on social media, your credit card, you left it on the table while you are eating. And you are trying to show your friends that, see, this is Easter period. We are enjoying. We went to one eatery or one hotel to have a good time. We spend over 1 million naira. You put your credit card on the table and you snap that picture, or you even do a video. And somebody was able to screen record your video. And the person was able to pause your video and zoom in on your credit card details. 2 days after, you started receiving a lot on your credit card. Did the person steal your credit card? physically, the answer is no. But the listing of credit card electronically, the answer is yes. The credit card is still with you, but your account is being what? Is being monitored, is being moved by another person. So you understand what I'm trying to say? So what we are trying to say is that the rulebook approach is no longer realistic. And that is why we have embraced the ethical framework approach. Okay? Then what we also found out is that for the rulebook approach, it doesn't make people to be able to reason properly. Their line of argument is usually very shallow. Okay? They tell you that thou shalt not steal. Thou shalt not steal. I just give an instance of theft now that is done electronically. And it's theft. It's a good example of what? Of theft. So another reason why we use the rulebook approach, the ethical framework approach now is that it allows for what? A reasoning mind. Okay, you can have a deeper reason, a deeper argument, and be able to establish that yes, this can also be a way out. This can also be another alternative to explaining that ethical framework. All right. So that is the reason why we have adopted the ethical framework in place of the rulebook approach. I hope it is clear. Are we all clear?
Yes, sir.
Thank you very much. So we go to the next one. We go to the next one, Sarbanes-Oxley Act. Because there are times, it's part of our syllabus, Sarbanes-Oxley Act of 2002. Now, why are we looking at Sarbanes-Oxley Act? We're looking at Sarbanes-Oxley Act because, in a way, it talks about how you can improve the auditor's independence. How you can do what? How you can improve the auditor's independence. Now, what do we mean? Now, what do I mean? Now, okay, let's continue. So, Sarbanes-Oxley Act was established after the Enron Corporation saga and all those corporate governance failure or corporate failures that happened in the year 2000 and 2001 respectively. So most investors lost interest in what? In investing in companies because they thought that they have lost all their investments. Okay? So government, the Congress of US had to come up with a way to give reassurance, okay, to the investors. And what did he do? What he did was that two members, a member from the upper arm and the lower arm of the Congress, they came together and came up with an act known as what? Sarbanes-Oxley Act. This act is named after the two congressmen. Okay, it was named after the two congressmen. Now, what is the highlight of this act? The highlight of this act is to improve auditors' independence and ensure confidence to the investors. All right. So that is why anywhere you go, any organization, any company that is owned by US, you want to audit such companies, you must have a certification in SOX. Sarbanes-Oxley Act, you must have a certification in SOX. So what that means is that for companies that are in US, when you have appointed your external auditor, there are other things that your external auditor is forbidden to do. So once you have appointed your external auditor, that your external auditor cannot do other things. So what are those things that they cannot do? Let's look at that one first before we come back to this one. All right. So once you have appointed your external auditor, you cannot do other services to you. Number one, you cannot employ them as to carry out bookkeeping services. They cannot. That is, to help you to prepare financial statement. They cannot. They cannot help you to design your internal control system. They cannot. That's what we mean by financial information system design and implementation. They cannot help you to design your internal control system. They cannot help you to appraise or value your assets, valuation and appraisal service. They cannot do that again. They cannot help you in actuarial services. That is, they help you to compute the losses, compensation, and the likes for insurance purposes. They cannot assist. They cannot help you in internal audit outsourcing and internal audit and outsourcing. That is, they want to help you to employ internal auditors. They cannot. They cannot also help you. They cannot be. They cannot act in your capacity. They cannot do decisions on your behalf because they are part of your system. They cannot. They cannot also be a broker or a dealer to your organization. They cannot render that service to you. They cannot render legal services to you. And lastly, they cannot give you expert services any longer because they believe that if they allow the audit firm to render any of these services I mentioned to you, to your firm, it can make the audit firm to compromise on their what? Integrity. It can make the audit firm to compromise on what? On their integrity. So because of that, once you have appointed as auditors, that is the only thing you can do. Nothing more, nothing less. Please, that is not the case in Nigeria. In Nigeria, we have not adopted the Sarbanes-Oxley Act. So that's why you see instances where you have the external auditors, they are still performing some of these roles that I mentioned. Okay, some of these roles I mentioned, they are still possible. They are still practicable in Nigeria. Once you are aware as auditor, you can become their bookkeeper, you can become legal service, you can perform expert services, you can act in the capacity of the management. All of this you can do. All right, but not in US. That is the difference. All right. I hope it is clear. I hope it is clear, right?
Yes, sir.
Thank you very
Yes,
much.
sir.
So we go to the next one. Sex as a way, what we have in place in Nigeria as against Sarbanes-Oxley Act is the one that the Security and Exchange Commission has proposed to us, and that has been in existence since 2003. What did they say? What they said is that for us to promote or to ensure auditors' independence, there are two things we can do. Either you allow for audit partner rotation or you allow for audit firm rotation. That is what they propose for us in Nigeria. What does that mean? So we are going to talk about the difference between audit firm rotation and audit partner rotation. Now, what do you mean by audit firm rotation? Audit firm rotation is an act or a situation where the auditor, where the audit firm, we have to be relieved of their appointment after serving the client for a maximum number of 10 years, particularly to a publicly listed entity. I take it again. This situation whereby the audit firm, we need to advise the client after it has served the client for a period not more than 10 years, particularly for a publicly listed entity. Why for private companies, the audit firm can continue till eternity. There is no issue with that. All right. In the other case, audit partner rotation. Audit partner rotation is a situation whereby the lead engagement partner or the engagement partner that leads an engagement will be swapped or will be changed after carrying out an engagement for a limited period of time, say 3 years, while he allows another engagement partner to take over from him or her. So in that period where he takes over from him or her, he's going to be engaging by other clients, but not that particular client, so that he can increase or he can improve his independence. Because if he continues to be the auditor for that client for a longer time, it's going to impair his independence. Okay, it's going to do what? It's going to impair his independence. All right, it's going to impair his independence. So that is the situation. That is the difference or the distinction between the audit firm rotation and the audit partner rotation. Any question?
So
Any question?
the one about the 10 years, I'm not seeing it here.
You cannot see it where? Yeah.
Yeah,
Okay.
like in the notes, sorry.
Okay, hold on. I said the SEC approved the following measures. The rules relating to non-audit services were revised. In cases where the independence of the firm would be impaired, it is provided if it provided the non-audit services to the client. Rule for the rotation of audit partner. Certain partners in an audit engagement team should be rotated after no more than 5 to 7 consecutive years, depending on the partner's involvement in the audit. However, some small accounting firms may be exempted from this requirement. Established rule for an accounting firm will be considered to be independent if certain members of the management of the client has been members of the accounting firm's audit engagement for more than 1 year period preceding the commencement of the audit. A firm should not be considered as an independent from the audit client if the audit partner involved in the audit has obtained payment for the firm for services relating to engagement with clients for services other than audit, review, or attestation services. The auditors should be required to report certain matters to the client audit committee, including reports on any critical accounting policies that are being used by the client. The audit committee, the client should be required to approve the advance of all audit and non-audit services. There should be disclosures to the shareholders of information about audit and non-audit services provided to the client by the auditor and the fees for those services. That's one area. Okay, hold on. It's there. It's there. I saw it very well, very, very well. This is it. Now, auditors rotation. There are two different suggestions how auditors rotation should be achieved. Audit partner rotation. The auditing firm may remain as auditors of the same client company for an unlimited number of years until the company decides to change their auditors. However, the lead engagement partner and other key members of the audit team should be rotated regularly. Audit firm rotation. Alternatively, the accounting firm itself should remain as auditors of a client company for no longer than a maximum number of years, say 5 years. This is where this is supposed to be 10 years. It's 10 years now, based on CAMA. CAMA is one that mandates 10 years. Before now, it's between 5 to 7 years. But CAMA established it as what? 10 years, okay? I hope you can see it now. Note that in many countries, including Nigeria, this will require legislative amendment as the law frequently provides that auditors' appointment for a 1 year renewable indefinitely. I hope you can see it now.
Yes, sir.
So I'm not reading anything abstract, so it's in your material. If it's not there, I'll tell you it's not there. This one I just mentioned is there, okay?
So which one are we taking, sir? Is it this 7 years or 10 years?
10 years. 10 years.
All
10
right.
years is the new one, okay? That's the revised one. All right? Any other question? Any other question? We go on, right?
Yes, sir.
Okay, thank you. So, let's look at some of the advantages of audit firm rotation. What does it do? So, there are several arguments in favor of the rotation of audit firms providing independent audit, including in a long-term audit relationship, the auditors may become too close to management of the client company. This may weaken their professional skepticism and independence. So they may be more likely to compromise when disagreements with management occur in order to preserve the relationship and the audit and their fees. So one of the reasons is that they want to improve the auditors' independence. Number two, if rotation would not protect the independence of the audit firm, it improves public perception of independence and may increase confidence in the quality of the external audit. The perception of the public. When you change the audit firm, the public is aware that that partner is okay. You understand? That audit firm is doing fine because that's why they don't want to continue forever. That's why they have been able to change the audit firm. So that is going to give them some level of independence that there is what? There is a transparency, okay? Now, argument against rotation of firm, that is, disadvantages of audit firm rotation. One of it is that there may be negative effect on audit quality and effectiveness in the first year following a change. That is true, because when you're auditing, the more you audit, the more you get to know the client's business. So that first year, because you are changing, you might not have gotten an understanding of how the client business operates. That's one of the disadvantages. Low quality audit work. That's number one. Number two, there is also substantial cost from changing auditors regularly, as the auditors attempt to familiarize themselves with the new client. So what that means is that when you change the new auditor cannot collect the same audit fee as the previous one. So there is going to be an increase, and that can result in what? Increase audit fee as a disadvantage. Number three, there is no evidence that compulsory audit firm rotation has a positive impact on auditors' independence and audit quality. That is, it is neither here nor there. That whether you change the auditor, you don't change the auditor or the audit firm, it does not have any impact on auditors' quality and auditors' independence. And number four, the marketing of auditing listed entity is dominated by the Big Four audit firm. If this domination of the audit market continues, which is probable, it may be difficult to change auditors easily. The other large firms may not have available resources to take on the audit and may be independent because of other non-audit services that have already provided. So what that means is that you have the Big Four, and the Big Four, they always come at a premium, at a higher price. So when you rotate, that means it will only benefit only the Big Four. And some organizations cannot afford to pay the audit fee of the Big Four. So what happens to them in that regard? That means they are going to suffer. Okay? These are the disadvantages of the audit firm rotation. Okay? So we are done with that aspect. So we move to the next one. The next one we are looking at is transnational audit. What does it mean, transnational audit? It means audit across the world, across the nation. Transnational, audit across nations. So what is the meaning? A transnational audit is an audit of financial statements which are or may be relied upon outside the audited entity's home jurisdiction for the purpose of significant lending, investment, or regulatory decisions, which may include audit of financial statements of companies with listed equities or debt and other public interest companies which attract particular public attention due to their size, product or services provided. So what do we mean? So when we talk about transnational audit, what we are saying is that it's a specialized kind of audit, right? That involve the audit of financial statements of companies that have jurisdiction. They have their own jurisdiction, that where their office is permanently located, and in another place where they have other locations for the purpose of what? Significant lending or investment or regulatory decisions. So let me give you an instance. So Nestle has its headquarters in Holland. Nestle head office is in Holland. So Nestle Nigeria, the one that is located at Ilukbeju, but they have now moved to Shagamu Interchange, okay? So they want to expand their business and they want to obtain a loan from a Nigerian bank. When they obtain a loan from a Nigerian bank, the bank is aware that they have a parent company in Holland. What do? They will not only request for financial statement of Nestle Nigeria, they're also going to request for financial statement of Nestle Holland. Why? In case the one Nigeria decides to start having financial related issues, their parent company will step in to help them out in that regard. That's all true. So that audit, that set of audit that is conducted, that involves the parent company where they are located and the other locations where the company is for purpose of either investment, lending, or regulatory decisions, right? That's what we know as what? Transnational audit. Another example is Toyota. Toyota has their head office here in Japan. We have Toyota Nigeria Limited. If Toyota Nigeria Limited say they want to start to manufacture vehicles in Nigeria for Nigerians and they needed credit, a Nigerian bank. Nigerian bank will not look at Toyota Nigeria only. It's going to look at Toyota Japan and ask them to also furnish their what? Financial statements. So in case Toyota Nigeria failed, they can Toyota Japan to assist in that regard. So that's what we call it a transnational audit. All right. So this audit is being performed by some special kind of auditors. So the auditors that carry out audit of transnational, we call them transnational audit committee. I take it again. The auditors that carry out this specialized form of audit, we call them what? Transnational audit committee. Now, this transnational audit committee is a renowned committee in the IFAC world. That is the National Federation of Accountants. They are well known. They are well recognized. All right. So what do they do? So the National Audit Committee is just like a pressure group. What is a pressure group? A pressure group is a group that is formed to promote their what? Their members' interests. Example, NUPENG. Example, NLC. Example, TUC, Trade Union Congress. NUPENG, National Union of Petroleum and Natural Gas Workers. PENGASIN, Petroleum Senior Staff Association of Gas something. You understand? All of these are examples of NLC, Nigerian Labour Congress. All of these are examples of what? Pressure group. So they always, if you see them, they're always fighting for their members' welfare. All right. So that is what this committee is also is. It's like a pressure group that promotes the interests of their what, of their members. And another thing they also do is that when there is a need, for instance, for advice or consultation, they always provide consultation to IFAC when the need arises. And also, when they are developing new accounting, their input is also needed or necessary, so that they can help us, with their wealth of experience, they will be able to give advice on how certain things to be done, so that it will become a globally accepted practice. All right. So that is what a transnational audit committee is. Okay. So that's what all what you have here is what I just explained now. Any question? We go to the next one. Audit of small companies. Now, this is no longer supposed to be in the syllabus. Why? With the new law 2020, CAMA 2020 has amended, they've been able to establish and say that small companies, they are not mandated to be subjected to statutory audit any longer. That has been in existence since 2020 or 2020 or 2021. And when that law was passed, yeah?
Sorry, sir. That's companies that their total revenue is not up to 100 million.
Yes, yes. They are not subjected to statutory audit any longer. That has been on since 2021. Before now, that is what the small medium audit firm, that's where they always make their money. You tell them that go and do your audit so that you will not be on the wrong side of the law. But since 2021, government has passed a law that they are exempted from statutory audit. So you don't need to conduct your statutory audit every year any longer. It's now voluntary if you so desire. All right, that is the new law now. So, but before how do we know a company that is small in Nigeria? According to CAMA, for you to say a company is small, there are certain requirements that you need to look out for. Number one is what my brother just said, 100 million. All right. Number two, that company must be fully Nigerian owned. That is, 51% of that company must be owned by Nigerians. Number three, there must not be any government representative on the board. No government representative on the board. Number four, there must not be any alien. Alien means not someone from space, so someone that is not a Nigerian must not be on the board. All right. And the net asset of such company also should not be should not be up to, I think it's 60 million or so, if I'm not mistaken. I think it's 60 million or so. That is the total net asset of such company is 60 million. All right. So what we are trying to say is that if any company can satisfy these conditions I just mentioned, then that company can be classified as what? A small company. Then it will be exempted from statutory audit. I hope that is clear. I hope that is clear.
Yes, sir.
Thank you. So let's look at the advantages and disadvantages of audit firm exemption. I mean, small companies exemption from statutory audits. What are the arguments for the audit exemption of small entities? Now, argument 4 is that they believe that when you do audit, there's a cost that you have to pay for the auditors, and that cost is high. And that cost would have been what? Useful for plowing back into the business. Number 2, providers of loan finance, the banks, when they request for audited accounts, they don't limit it to only audited account. There are other information that they also request for. So the audited account is not the main document that they request for. So that makes it what? Useless. Number 3, filing deadlines for the account of small companies is usually longer. So they tell you that they have to file before the 6 months. They have to file on before 30th of June of every year. Even by January, some of the information you have in the financial statement, they are already what? Outdated. So what is the use? Okay. Number 4, most countries allow small companies to publish abbreviated financial statements. Consequently, only a limited amount of audited information is available to users of these statements. So when you publish an abridged financial statement, how many people will be able to understand what you are trying to say? Knowing fully well that an abridged financial statement is not a detailed financial statement. So it can affect the decision makers or decisions that are reached by the investors in small businesses. Those are the argument for. Argument against this audit exemption of small companies is that is the audit serves as what? A deterrence to fraud. That's number 1. When you know they are going to audit your company, everybody that wants to perpetrate fraud, they will be very scared. Number 2, it gives users of financial information some form of assurance that the financial statement has been examined by professionals, and that everything is in order, that they can go ahead and invest. Number 3, it also gives some form of relief or respite to the non-controlling interest, the one we usually call the minority shareholders. When you do audit, when you perform audit, in a way, you're also protecting their interest, because most times majority shareholders do not allow them to breathe. When you don't allow them to breathe, to take decisions, they feel left out. But when they are aware that there's an audit that's going to be done, in a way, their voice is being is being held. Okay. Another argument against audit exemption is that the audit may identify areas where efficiency and cost savings can be made by the entity. These savings would have the effect of reducing the overall cost of the audit. Okay. Another argument against is that tax authorities are more likely to accept audited financial statements as a valid basis for computing the company's income tax liability. When tax auditors come, they always ask for your audited account, because they believe that if you have audited account, it makes their life easier, so that they can compute the client income tax liability. All right. So these are the advantages and disadvantages of exempting small entities from statutory audit. Any question? Any question? Any comment?
Hello,
All right.
sir. Sir, it's not a question, but What I want to ask is, some of us, this is the first time we are taking this advanced audit. I don't know if there is any chapters of concentration that we will read. Please.
So it's a good question.
If anybody tells you AOC, particularly for advanced audit and forensic, please, I'll tell you, take it with a pinch of salt. Why? ICAN, if there is one thing that has made ICAN to remain relevant even in this state of Nigeria, state of the economy, is the fact that ICAN questions don't leak. That's number one. They don't compromise on their questions. Now, what I can only advise is that, and that is the essence why this class is important. Why is it important? You have access to this recording at will. You can listen to it as many times as possible. And what you listen to more than once than twice, scientifically is going to stick in your memory. That's number one. Number two, if you are able to sacrifice some time to reviewing past questions, simulate yourself. We have sent you ICAN past questions from 2014 to November 2025. We sent it to you. Simulate yourself as though you are writing an examination, so that before the date of the examination, you are already equipped, you are already prepared. You already know how to manage your 3 hours, 15 minutes, and you know how to go about answering your questions. That's another thing you need to know. Now, what you also need to note here is that the more you practice questions, the more you listen to these recorded classes, the better for you. There was a diet. I can set 3 questions from one topic, audit evidence. I can still remember that. I still remember vividly. They set 3 questions from audit evidence. So if somebody has given you an AOC and said that, do not read audit evidence, how will you think that student will pass that paper? Tell me, put yourself in their shoes. It's going to be difficult, right? So that is why since I've been doing this for over 10 years, I cannot give you any area of concentration. What I always advise you to do is this. Try and understand all the 16 chapters. Know what is required from each of those chapters. If you can do that, I'm telling you, bring the question from anywhere, you'll be able to answer the question. And mind you, ICAN is very magnanimous. How are they magnanimous? They say that they will never tell you answer question. They tell you that attempt the question. So attempting does not mean that you must answer everything. So let's say you're able to, the course question is 30 marks. The other two questions from section B is 30 marks. Then you have the other 2 questions in section C that you're supposed to answer. That one is 30 marks. So 30 plus 40, 30 plus 60. How am I saying? So you have 15, right? The first one is 50, the second one is 15, that is 30. So 30 plus 40, that is 70, plus the other one, that is 100. So let's say that I can expect that you attempt the question. They didn't tell you to answer, attempt. The first question on session, if it's compulsory, you cannot run away from it. You're able to answer that question, and you got, let's say, 20 over 30 there, or even 15 over 30. The other ones too, 2020, you got 15 from there. You got 15 from the second one, that is 30. 30 plus 15, you're already on what? 45. And the second one, the last 2 questions, 15, you're able to answer a question. Let's say you got 7.5 of that one. 7.5 times 2, that's 15. 15 plus 45, that is 60. What is the pass mark? 50. So that is where I want you to look at it. Disabuse yourself from AOC. There is no AOC that can work for you. I must tell you. Okay? I must tell you that there is no AOC that can work for you. So disabuse yourself from that AOC. Focus on, drop a strategy. It's not too late. Your exam is like a month and a week away from today. All right? It's like a month and a week away from today. So you can still drop a strategy on how you want to attempt, how you want to tackle that examination. and come out in flying colors. So that is the best advice I can give to you is what I've given to you now. It's worth more than gold, though. If I tell you AOC and the AOC does not work, at the end of the day, you are going to start sending courses to me. So what I'm giving to you is good. Take it, use it, apply it, and commit everything to God. It is only God that gives increase. If you don't sow anything, you cannot reap anything. Okay? God says that I'm going to bless you with what I find in your hand, doing. What I find you doing is what's going to bless you with. So I believe and I pray that if you do the needful, this exam will be a walkover for you. Madam Molara, I'm with you, madam.
Yes, sir. Please, I want to request that you help us re-forward the Pathfinders because I'm not sure I have access to that in the group.
Okay, no problem. I'll
Probably
re-forward it.
was forwarded before I joined. Thank you, sir.
No
Hello,
problem.
hello, sir.
Yes, I'm with you, sir.
Yes, sir. I also want to just chip in something to the question my colleagues asked.
Please
Because
go ahead.
even when we check the Pathfinder for those who have reviewed it from 2014 to date, and I think that was their question, you will see that even though we are saying that ICAN does not have areas of concentration, and our other tutor in auditor has also confirmed to us that it is not, ICAN does not just dabble on every topic to start asking questions. If you study those questions from 2014 in the Pathfinder to date, you will see that diet to diet, there are about 8 to 9 topics, 9 topics that every year every diet, there's a question coming from those topics. 8 or 9, they are no more than that. And for somebody who wants to pass the exam, if you study that pattern of questions that have been coming for the past 10 years, if you are able to cover and be grounded on those 8 to 9 chapters, there's no way you will fail. Number 1 is reporting. Reporting, every year they bring questions from reporting. Number 2 is practice management.
Hold on, sir. Hold on.
Yeah.
Let me ask a question. Before you continue,
Yes,
I'm going to continue. I want to ask a question. Is this your first time of writing AAF?
No, sir. This is not my first time.
Thank you. You know I'm asking that question. Why I ask that question is that if you have this understanding of 8 or 9 questions for the past, that they normally set questions for the past 10 years or whatever year, topics, right? Chapters. How come you have not been able to become chartered? That's the next question I'm going to ask.
Okay, can I answer, sir?
Please go ahead.
Yes, as I said, I've only attempted the exam once. And even when I attempted the exam, I didn't have this understanding. I didn't even have access to the Pathfinder past questions.
Okay.
I only listened to the lecture. I didn't even attend lecture. I only listened to your tapes on YouTube.
Okay.
But it's fine. It's not. I'm not killing myself that I fail. It's fine. It's good to fail. But I'm just saying.
No, it's good now because of the failure that you're able to do this now.
Yes, this is a pattern I have observed.
Okay.
In every diet, they always come, either for section A, section B, section C. They will always come from this 9 area. Number 1, reporting. Number 2, practice management. Number 3, evaluation and review. Number 4, audit evidence. Number 5, audit planning. Number 6, audit approach. And then audit assurance, something about assurance services. Yes. Yes, those are the ones I have observed. But there are others that are not then group audits. That makes it 8 on.
That's number 8.
Yes, that's group audit, then assurance services, audit planning, audit evidence, audit approach, reporting, evaluation and review. So those are the core, that's like the heart of the course. Then practice management. Okay. So if one is able to narrow his study on those 8 or 9 areas, then the remaining time you have, you can use it to cover the rest of the syllabus.
Okay. Thank you, sir. Who is talking, sir? Who is talking now?
My name is Usman Amadou, sir.
Okay, thank you. Now,
Yes,
the last topic the last chapter you did not mention is rule of professional conduct. That is chapter 3. You didn't mention that. Those
okay,
are
sir.
areas that you usually set questions for. But let me give you another perspective so that you'll be able to have resounding success in this diet. Let me give you, in line with what Mr. Usman has said. Now, it's not that I don't want to, it's not that I'm not aware of what Mr. Usman has said. It's not that I'm not aware. But what if this diet actually decides to change the pattern? And because of that change, that was what you utilize, because that this person is an authority in this topic, in this paper. It cannot be wrong. And the actually decided to change this diet. How will I feel? Do you understand? So what the approach I want you to do is this, everybody on this call. This is the approach I want you to use. You have heard of this term before in costing, known as what? Pareto analysis. What's Pareto analysis? Pareto analysis says that is 80-20 principle. So what he has said, right? So that you'll not be able to use, so that what I'm giving you now is something that is going to help you to have resounding success in this paper. And if at the end of the day, I'm also going to test it from this diet. If this principle I'm going to use now, if you're able to use that and you all pass, then that means that it's what I'm going to be preaching from next diet. And the principle is what? Pareto analysis. What does it mean? What it means is that those 9 topics that he made mention of, let those one constitute the 80% of the syllabus that you are going to cover. Why the other areas that are considered as what? 20. Let that one constitute other areas that it did not make mention of. Mind you, these chapters in this syllabus, there are 16 chapters. 9 is the one that Mr. Amodu has said, right? So the remaining 6, let that one form the 20%. What am I trying to say? If you're able to concentrate 80% of your time on those areas that Mr. Amodu said, and concentrate your 20% on the other 6 chapters that I also mentioned now, I can guarantee you will not write this paper and you have any regret. You are going to pass. So what am I trying to say? Take the 9 chapters that he has mentioned, read it very well. Also create time to read the other 6 chapters. That makes the other 7 chapters. That makes 16 chapters. Read more on that chapter, on the 9 chapters, then also have an understanding of the remaining 7 chapters. So that in case either decides to do the other way around this time around, you will not be caught in the middle. You will just be smiling and say, thank God I listened to, thank God I was in the class when this approach was being given to us. This guide was being given to us to use. So like I said, no, he's right with what he has said, right? I agree with him. But what I'm afraid of is that ICAN cannot be predicted. I give an instance now. I think there was a guy that ICAN set question on one particular chapter. That is audit evidence. 3 questions came out of audit evidence. So if you have not read audit evidence in that paper, in that diet, how do the person will pass? Do you understand what I'm saying? So that's what I'm trying to say. I don't want us to be caught in the middle. And we now say, had I know. So what you are going to devise, how you are going to go about it is this. 80% of your energy concentrate on that 9 chapters that you mentioned. Okay, I hope you have the recording. You are going to have the recording at the end of the day. Read more on those 9 chapters. Also, read more. Read on the remaining 7 chapters that you don't mention. Those ones too. I can set questions on those areas too. Okay, I can set questions on that area too. That is my own judgment. That's my own conclusion. I hope I've been able to, at least for the first time, somebody was able to get word out of my mouth that this is what we can do. So I believe that this proposal, if we can utilize it, you see that you are going to touch on every aspect of the syllabus, and you also be in safe position for the exam, so that however they set the question, you'll be able to come out in flying colors, whatever they do. But if you go and set questions on that, you go and concentrate only on that chapter, 9 chapters, and they set questions on that 9 chapters, maybe they only set questions on 4 of those chapters, that means you have already limited your chances of success. So what I'm trying to do, I'm giving you 100% guarantee how you can pass. Use the 9 chapters, also create time for the 7 chapters, so that at the end of the day, you have all the 16 chapters with you. If you decide to set questions on this time around on the 7 chapters, you are okay. If you decide to go the normal traditional way, setting questions from the 9 chapters, you are fine. The bottom line is that at the end of the day, you can call yourself what? An ACA at the end of the day. You understand what I'm saying? So thank you very much. Does anybody have any contribution to that in that regard?
Thank you, sir.
Okay. So with this, we have rounded up for today. We still have one more class. That will be next week, Saturday, by the grace of God. Hopefully, by the grace of God, we are going to wrap up everything by that time. All right. So we are going to conclude on this area on next week Saturday. Next week Saturday is that should be on the 18th, God's willing. We are going to wrap up on that day. Please endeavor to be in class so that we can wrap up, and we are going to commit everything to God's hands. Thank you for your time. Thank you for your sacrifices. Thank you for all the contributions. I did not take any of them with levity. I appreciate everyone that has contributed from the beginning to this date. Okay, thank you so much. Let's do it one more time again next week Saturday. Thank you for your time. Okay.
Thank you, sir.
All right.
Thank you, sir. God bless.
Amen.
Thank you, sir. Bye.
All right. Bye.